Okay, guys, welcome to this training. The essence of this training is to show you how you can trade on deriv. It's just a simple strategy that I've been using to trade on binary.com or deriv.com, as the case may be, and at least making some profits daily. The amount of money you make is dependent on your account size, but there's just a simple rule that I've been applying, and it has actually been working for me. So I'm going to share my screen, and I'm going to share my screen, and so that you guys will see how I trade on it. Normally, I'm supposed to trade on live, but I made a withdrawal. So I'm going to use this demo to demonstrate it. Maybe in our other meetings, I will use live. Then you can as well fund your own live account. You can start with $20. That's one good thing about trading on this platform. Unlike trading on MetaTrader 5, trading $20 on MT5 may not really be that good. But here you can actually use $20 and trade. Hope you guys know what they call the Martinez rule. You can unmute. You can, as long as you don't have background voice that would disturb, you can unmute. Okay.
No, what do you mean by motivate? What do you call it again?
Martingale. They call it Martingale. Martingale. I think M-A-L-T-I-N-G-A.
Martingale.
Yes, Martingale's rule.
Okay.
Yeah.
No, we don't.
Okay. It's a rule that
I have no idea.
Okay. It's a rule that states that if you make a trade and it goes at loss, you double the amount you used in that trading in order to recover your loss. Let's assume you trade with $1 and you lose that $1. Then your next trade should be $2. Okay. So that when you use that $2 to trade, it will recover the other $1, and also you have a little profit to add up to your account. Okay. I want you guys to unmute so that you can hear me. I mean, so that
Yes, I get you.
No, we can hear you now. It's a question of whether we want to talk on it.
Okay. Unmute so that you can interact. I actually want it to be an interaction. Okay. After today, I will be creating the meeting, and I would want you guys to fund your account so that we'll be placing the trade together. At the end of the trade, you would have seen how much you have entered your account. You need to have a trading plan. But if you have a background voice that may disturb it, you can actually mute yourself. Okay. So you need to have a trading plan. You need to be like, this is the amount I want to make in a day when you want to trade. Let's assume you have $20 in your trading account. You may actually be like, okay, well, this is the amount of money I want to make. Let's say I want to make $5 or I want to make $10. But the truth is, you don't need to overtrade. You don't also need to be greedy while trading. Okay. Now, I trade on synthesis because that's volatility index. Okay, I don't know who is having that background voice. You can just try and mute yourself, okay? All right. Okay, so I trade on volatility because it doesn't have any time restraint, doesn't have any time limitation, can always trade it at any time, unlike Forex that ends on Friday night, okay, and also has time that it stops. So I trade on volatility. I use it to trade, and let's go over to the trade. Now, before I trade, there are two methods that I've been using. One is, once I enter a trade, I check the trend, whether it is uptrend or downtrend. So I try to trade according to that trend. Though I set some indicators here, like this stochastic indicator and this zigzag indicator. This particular one is zigzag, while this one is RSI. So even though I place them, but I don't actually trade with these indicators. If you know how to trade with indicators very well, you can still make money with it, doing this kind of trade. Initially, we were using this deriv to make money through arbitrage, but now the amount of dollar in deriv arbitrage and that in Binance is almost the same thing. I think 568, 570, and all that. And Binance would be maybe 571, 572, 573, or 575. So the difference is not that much. So trying to use it for this thing may not really be that profitable. So you can actually trade on your own and make some profit, like $10 and withdraw. So what I normally do is I trade, make like $10 or $20, depending on the account size. I withdraw, daily trading and withdrawal like that. So you can just have your own trading plan. So now let's go over to the market. What I normally do, I start with volatility 10, which is the first one. It has volatility 10, 1S index, then volatility 10 index. I check through all of them to know whether anyone has signal that will warrant me to trade. Okay. So if it doesn't have, I won't trade. Now, there are places where I don't trade, okay? When you look at this candle, you will see that some of the candles are longer than the smaller ones. Once I notice that small candles are being formed, I don't trade until there is a breakup or a breakout before I trade. So when the market is forming all those little candles, I don't trade, because if you say up, the market may go up, but maybe before the end of your tick or your time limit, it would have gone to the opposite direction. But if the market is having a long candle, you can actually stake on it that time and be profitable. Now, the number of ticks here, I use 10. Some people use 5 ticks. Some people can use 6. Some people can use even 1 tick. But I normally use 10 ticks. Okay. I normally use 10 ticks. You can define your own, but this is the way I trade. I use 10 ticks. You can set it to be in minutes if you like. You can set it 1 minute or even how many hours you want. But I use ticks and I set it at 10 ticks. Now, no matter my account size.
So hold on. Can I ask?
Yes, ask.
Hello, can I ask?
You can ask a question.
Yeah, so the ticks and minutes, what's really the difference?
Okay.
Or
now,
what's the advantage using ticks?
Okay. Let's say you are using minutes, okay? And you put this to 1 minute time frame. Or let the market, okay, let's just say this my candle is a 1 minute candlestick. Are you seeing it? Are you see where my
yes, yes.
Okay. It's a 1 minute time frame. So that means every candle is formed at every minute. At the end of each minute, another candle will start forming, right? Now, I can set my minutes to be in 2. This minute you are seeing here means that if I stake the market to go up in 2 minutes time, if the market is above where my entry was, I will be in profit. But if the market is below where my entry was, I will be at loss. Okay. Do you understand?
So this is similar to options trading now.
Yes, similar to that.
It's looking more like options.
Yes, yes, it's similar to that. Then, if you are using ticks, as you can see, the market is ticking in pips. As you can see, 313, 550, that is ticks. So if it ticks up to 10 times and the market is above your entry point, you will be in profit. Do you understand? But if it ticks up to that 10 times and the market is below your entry point, you'll be at loss. So I normally trade with minutes, but that time I noticed that sometimes my trade may be entering, maybe at the end of 1 minute, the thing would have lost, and you don't have lower minutes. You don't have like 15 minutes or so. You can't trade less than 1 minute. So because of that, I use tick and I set it at 10 ticks. Okay. So if I do my prediction and I'll be like, okay, in the next 10 ticks, it should be up or down. Do you understand? So that's the difference between the tick and the minute. It's just like when it will elapse and your trade will automatically close, giving you either profit or loss. Okay. Now, this is where the trading comes in. And after this, you can actually go and practice it on demo before going into live trading. Like I said, our next meeting, I'll be trading on live so that you people will see how it works. Okay, so what I will now do is go through the market to know where there is signal. I can start with volatility 10, 1S, allow it to load and know. Okay, looking at this place now, this is a downtrend, right? This thing is indicating a downtrend here. Are you seeing it?
Yeah.
This place is indicating a downtrend. Okay. Sure, you understand now? It's going down. Sure, you are seeing that line?
Yeah.
Okay. Now, if I am to trade here now, all my trade will be down. As you can see, the candle is going down. So what I will just do is to do what? I will sell. And remember, it is 10 ticks. So I will sell. I'm starting with $1. So as I've sold this $1 now, I'm expecting the market to close in the next 10 ticks. As you can see, it is loading here. It's loading here now. So in the next 10 ticks, it will close in profit. And you can see I won this trade now, right? Even though I have like $726 here, I'm actually going to use this $26 for my trading. Okay.
Yeah.
What I'm using here is the $26, not the $726. Now I've made a profit of $1.95. So the next, because my target is to make, I'm using $26 to trade, and my target is to make $5 to $10 profit, right? So I will now trade $2. Normally, I am supposed to trade 1.95. That is the profit I made. That's what I'm supposed to trade. So I'm still going to sell again. Normally, I should mind my entry point. When you're trading live, you can mind your entry point before you enter the market. As you can see, this one is ranging, but I've traded $2 now. And at the end of the tick now, if you can see, I've won this trade as well. Okay. I've won this trade. So I've made, if you check the total money I've made now, you can come under this, go to report, and go to profit table, and you see the money we've made. The first one was 0.95, and the second one is 1.91, right? And the two of them will be making around 2 points. That should be 2.8. That if I'm to calculate it, 1.91 plus 0.95. Okay? That would be 2.86. Okay, so 2.86, I'm supposed to use the whole 2.86 for trading now. So I'll just use all my profit for trading. Remember, if I lose this 2.86, what I just lost is my profit. You understand? Now, this market has gotten to this point, so I will have to check another market. I'll have to check another market to know whether there is any signal in another place before I trade. And right now, in this point, I cannot say that the market is going down, so I will not actually trade. And it is forming small candles. So I don't normally trade when it is forming small candles. So I will just leave this one and check another market. So these are just simple strategies that you can use. Okay, looking at this place, this is also a downtrend, but the candles are small. For me to trade here, I have to wait for a breakout below this point before I will actually trade. So I'm not going to trade there because I'm not seeing any signal that is asking me to trade. Okay, so I will check another market to know. Remember, I've made 2.86, so I'm just looking for $10. Now this place, I have so many small candles. Any trade you place in this place, you may likely lose it. So you don't trade in this kind of scenario at all. you just leave this particular market, because any trade you make, unless you are lucky, you may likely lose it. So I'm not ready for that loss now. So I'll check another market to know whether I'll see a signal that will allow me to trade. In this particular trade, I can actually decide to be selling here, because even if it goes at loss, I will still recover it back. But I am not too certain with this market, so I'm not going to trade this one. So I'll check 50 index. So this is what I do. I just go through all the markets looking for where I will see a confirming signal before I trade. Okay, what about this place? Here now is showing an uptrend and the market is reversing. So I cannot come and be selling in this point. Are you guys seeing this? I cannot come and be, even though the market is tempting for me to sell at this point, but I'm not going to sell because this market has already broken up here and it is trying to go up. This thing is just a retracement for it to go back up. So if I am to trade here, I will just wait for it to start going back up before I will start buying it. So I am not trading now, because if I am to sell here now, there are possibilities that I will lose it. So, okay, before the 10 ticks, you see, the thing is returning back up because that is not a trend. So let me check 75, 1S index. So sometimes this thing takes time, but it can take up to your 30 minutes of your time. This is an uptrend. You can see it's doing lower high and lower, higher high and higher low, higher high and higher low. Hope you guys know this rule of higher high and higher low, because the market can never go in one direction. It will always be forming higher high, higher low, lower high, lower low, depending on the trend that is occurring at that point. So now I've gone to see this place now, small candles are being formed. Normally, because there is a gap here, I'm supposed to buy this market, but it may remain like this, and maybe when the time your ticks will be ending, the thing will just go down and you will lose it. But I'm supposed to buy it because there is a gap. Hope you guys saw that gap there. After the green candle, there was a gap, but it's not a confirmation for you to trade. What I normally do is I avoid this kind of small candle trading. If I want to trade it, it's just let me just trade. Of course, if I bought, I would be in profit by now, but the signal is not, I am up to 80% for me. So that is why I did not trade it. I can check volatility 101S to see. Okay, I'm not seeing anything. So let me just go back to my volatility 10, 1S to know whether it has returned. Okay, wow. If we were here before, I would have actually taken trades here. As you can see, it's formed long candles. Okay. Now you cannot actually say this market will now start reversing or will start going up, because one, it has formed about 1, 2, 3, 4 up candles. Okay. If you buy now, you may actually be making a mistake, because you can see now it's trying to make a decision whether to go up or down. So I will have to wait. If I come back to this trade now, I'll check whether it will form a, if this particular candle will end in red, it end in this, so I'll have to wait, okay? So there's no signal here for me to trade. Let me check out the second candle. So normally you should not trade. Okay, looking at this place now, this is an uptrend, and this is, it has formed this upper or higher low. So I can actually buy, but let me wait for a confirmation of a buy signal, not what it is doing here, because it's trying to break down here now, which it has done, but that's not a confirmation. Okay, look at what I'm going to do. I'm going to put my 2.86 in this point now and see what will happen. Now, where the Martingale rule will come to play is, if at the end of my 10 ticks, I lose this 2.86, I am going to double it. And if I'm to double it, it's going to be around 5 point something. Remember, I'm trading with $26, okay? So now I lost it. So I'm going to increase my this thing to 5.86, okay? or $6. $6. Unless this is a breakdown. Okay. And normally the market is going down. You can be like, let me sell. Okay. But the only problem that you may sell and you will end up not being in profit. So I will just keep on buying. So I've bought 6.8. Okay, let's see what will happen at the end of the 10 ticks, whether it will be in profit. And wow, thing really went up before. Okay, let's see whether this one will end in profit. Ouch. Ouch, just a little thing. Okay, this one did not end in profit, so I'm going to take it to $12. Okay, don't mind the loss you are having. It's just trying to play with your emotions. So I'm going to buy again. Normally I lost $3 and I lost $6. That is $9. I'm supposed to trade $18. I'm supposed to trade $18. So that's what I'm supposed to trade, $18. So because I am sure this market is supposed to go up. Okay. That is why this one has entered now. Because I'm sure this market is supposed to go up. Now remember what I had was 26. Now it is at $30, right? It has $30 because that one has entered. Now what you will do is, if I had used $18, which is what I was supposed to use here to trade, I would have had more profit. So what you would do is to check out your profit and know how much you made. So if I check out the profit here now, you will see that I lost from my 2.86, I will minus 2.86, meaning 0. Then I will also minus 6.86. Then I will now add 12.26. That means I've made a profit of $5.4. Okay. Remember what you are using to trade is just $26. So I've made a profit of 5.4. Now, if I want to continue this trade, I will just come back here and put it 5. So I'm going to stake 5 now. Now this place is ranging. Okay. Are you guys with me? So this place is ranging.
Yeah, go ahead.
Yeah, let me just look for another signal. Let me check whether this volatility 10 has returned back. Let me check. Oh, it has returned. Okay, I'm going to be selling at this point now. If I were here on time, so I'm putting 5 points. Look, I'm putting $5 now. Okay, and that is it. Sure, you understand now. In fact, if you see this kind of candle and you place your trade, you are likely to, win it. There is almost 90% this thing that you're going to win it. Okay, so now the market is trying to maybe go up before going down again. I don't want to be waiting for this market, so I'll just have to check another one. So my total profit now is $9.77, right? Since my total profit is $9.77, my target is to make like $10. I am not going to trade my $9.77. So I may still decide to trade $5 or reduce it to maybe to $2. Can you guys hear me? Remember, you have a trading plan. You have a trading plan, so you have to stick to your trading plan. I've already made $9.77, and my target is to make $10. So what I'm going to do now is I'm going to trade $2, knowing that if I trade $2, I'm going to make 3.91, which will take my profit to about $11, and I am done for the day. Don't overtrade. If you overtrade, your emotions will come, will come against you, and you may end up losing money. Okay, so I'm trying to know this market is supposed to go up, but let me see if there is a confirmation of it. Then I can now buy with $2. Okay, if this $2 fails, what I will do is I will increase it to $4. That is why I reduced it. That is why I did not use my whole. That is why I didn't use the whole $9 to trade. As you can see, the market is going to fail, so I'm going to use $4. I'm going to use $4, but I am still expecting this market to go up. But then, since I've had a loss here, let me just check out next market and see. So if once my profits, okay, in this place actually I'm supposed to be selling. I'm supposed to be selling, but I need to confirm it because you can see it has already formed lower highs, lower highs, lower highs. Okay. So, but there's no much signal for me here now. Remember, I used $2 and it failed. I'm going to use $4 now. And that is still part of my profit. I remember I told you when I have this kind of scenario where, sorry, our time is running out. So when I have this kind of little candles, I won't trade. So I'm looking for where there will be longer candles. I'm looking for where there will be longer candles. So this place, I'm not seeing a signal to go up. So let me check another candle. So if this $4 trade enters, I'm going to stop for today. So I just need to check out the market very well for trading. See this place. I'm not going to trade. Okay. I wish this market will retrace a little, then I would have bought. But then let's wait for another one. If I can wait for the next candle to form. If the next candle of this market starts going up, or if this particular one tries to come down like this now, I will buy. Okay. So I've bought this one now. Let's wait for it. If this one enters in profit, okay. You know, sometimes when you place a trade, the market will just move. It will not enter immediately you place it. But let's see. Okay. So this one now has entered in profit, and the total profit here is 737. Okay. I started this trading with 725. So 737 minus 725, that's a profit of $12. Okay. But remember, I wasn't using the whole 7 something to trade. I was just using $25 to trade. Do you understand? So that's the end of this trading, because now if I check my reports, I've made profit. I've made about $12. I can decide to bring out 30 minutes and make $12, maybe in the morning time, bring out about 30 minutes again in the afternoon, or anytime I am free. If I check out and see that there are signals for me to trade, I will just trade. And before you know it, you are collecting up to $20 with little capital. Okay. If I want to trade, let's assume in my life account, I have $737. What I'll be targeting every day is at least $700 and above. And it is very, very achievable within a few minutes. So if you check out our profit level here now, you will see we've made about $12 profit. That's at the end of everything. So that is where we'll be stopping the trading for today. Next time, I will be trading on live. If you have funded your live account, you can as well join in the trading, and you will see that before we will finish the Zoom meeting, any amount of profit I make here, you also would have made it as well. So please, is there any question?